All right. By the way, if you have a syllabus I had posted earlier, it might have some other information on here that's incorrect. If you see that information that's incorrect, just ignore it. Okay, first thing, textbook and course materials. There is actually, I have had little success with the actual publisher to get anything on this book, but there is a way to get this book for a very inexpensive price of $13, and that is through a website called C Textbook. Now, it's only a PDF form, but ctextbook.com it's called. And I don't know. I think it's a legitimate site. They took PayPal. So anyway, my reason for going through it is I couldn't get a rep to respond to me. So I'm in the same boat you guys are, in that I went out and chunked and bought it. But the textbook is not the class. We use it for some stuff in the class, but not all of it. So just keep that in mind. But like I say, I think on this website, I think it's like $13, something like that. Fairly inexpensive, anyways. So if you, it's a good option. It's a very inexpensive option to go. And now, if you want the whole full thing, all the documents and all that. This isn't the place to go, but anyway. So it is available, $13, and you can get it there. All right, prerequisites, I assume you guys all have that. Read through this stuff. Okay. First methodology. Okay, so basically, we'll do handouts, textbook problems, short cases. We'll do some multiple choice questions too that'll allow you to get extra credit points. They come right out of the CPA exam review questions usually. And basically, those are all things that we do in class, and then the exams are given outside of class. Auditing is a very different kind of class than most of your accounting classes. Is there one that has not had an auditing class yet? If you want to say it, you can text me if you want. And my reason being is I don't know how far to go back, into going over stuff. But we are going to review some stuff today, anyways, for everybody. But at some point, if you haven't had an auditing class before, let me know some way, and I'll try to go over some stuff that maybe you need. But anyway, the exams are 8% of the grade. The exams are, unlike most of your other classes, there's very little calculation in them. It's not find this number, make this journal entry. There's none of that kind of stuff. It's all, if you've already taken a class, you kind of know what it is. Exams usually consist of 1 or 2 chapters, and the reason for making these exams shorter is a couple of reasons. First of all, people retain it better. And second of all, usually they do better on the scores. The scoring is better if you break it up into smaller chunks. Zoom meeting, blah blah blah. Ebook. I haven't been able to connect this ebook yet. I'll try to do that again. Hopefully, I'll get a response from the rep. But anyway, I email out the stuff before the Zoom meetings, and they're also in Blackboard, which I will pull up here. Nope, that's not Blackboard. Nope, that's not Blackboard either. There's Blackboard. So in Blackboard, if you go to class handouts, the stuff is there. These are the same things I emailed to you, so that you're not going to find anything new in either the email or in this. So they should, anyways, match up to be the same. Zoom meetings. You guys obviously figured this one out, or we wouldn't be talking. But the Zoom meetings, and there's also going to be one here for the recorded Zoom meetings that is not up because we haven't recorded anything yet. Okay. And we'll see how to submit stuff when we start doing the first submittals, turn stuff in. Okay. And on here, most chapters will have a handout, chapter assignment in the tech book, multiple choice questions, chapter exams, blah, blah, blah. Okay, this part, the rest of the stuff is just Mickey Mouse. This part is important. All assignments have unlimited attempts. So you can turn something in. If you turned it in, if you did it wrong, or you turned the wrong thing in, you can resubmit it. You don't have to tell me. You can tell me, but you don't have to. They have unlimited attempts. Okay, now how do you turn stuff in? Well, there's acceptable forms of turning it in, and just about any way you can turn it in, I'll take it. Most people just fill in the Word document or the PDF document as they go along, and then you just, when you submit when you submit the item to be graded, you just submit the document, whatever it is. You don't have to change the name of it. You don't have to change your. It'll go right into your account, your Blackboard account. So you don't really have to do anything except resubmit it back in with it filled out. And again, most people do it this way in Word. Now, you can also print it out. A lot of people like to print it out, and that's actually a good way to do it, is to print it out and then write in your answers and either scan it or take pictures. Now, if you take pictures, you can, if you take 10 pictures, we can load all 10 of those pictures into Blackboard. Remember, this is unlimited attempts. You can put as much stuff in there as you want. So a handout with 10 pages, you can take pictures of 10 pages, submit those pictures, and they go in. A couple things, but do not zip the pictures. Don't put them into a zip file. I know you think, okay, I'll make this nice and easy, put it into a zip file. Blackboard doesn't like zip files. It's very picky. So don't put them into zip files. If you're going to take pictures, just go ahead and submit the pictures. That's absolutely fine. And yeah, you don't need to put them into zip files. In fact, that makes things, it slows things down. And the same thing is true. I got it down here for, who the heck formatted this thing? And same thing for Apple users. Apple, they don't have, there's the zip files for Apple are page files. And again, Blackboard does not like them. So if you just submit the pictures or I think in Apple, you can actually change the page files into PDF files and then submit the PDF files. And that's fine. PDF files are fine. Pictures are fine. Word files are fine. It's these multiple files and zip and page files that are no good. And basically what I do is if someone does put those in, what I have to do is put them in a different folder and convert them. And I'll be absolutely blunt with you, I do those last because they take a lot more work to pull them out. But anyway, yeah, so if you're doing it in zip files and page files are not fun. Okay, you can also just use notebook paper if you want. If you don't want to print anything out and you don't want to write into the document itself, you can also just use notebook paper. Take pictures or scan it, either way, and turn it in. That's fine too. So basically, I'll pretty much take any way that you want to do it. I'll take it, as long as it's scanned, PDF, or pictures. I can take it. All right. This is a note about the Blackboard app. for smartphones sometimes cannot submit assignments. There is kind of a problem that sometimes, and I'm not sure what it is, but the Blackboard app does not work well. And actually, the people that have the more problem are the people with the Apple stuff has more problem. Now, I have no idea why it's like that, and I have no control over it. But yeah, just note this, and this isn't just for my class. This is for other classes. So if in other classes you're having a hard time submitting it, or if you, you know, they're saying that they didn't get it or whatever, is check to see, it might be the app, and maybe if you submit it using a computer, it might go in a little bit, it might have more chance of going in. And I'll tell you the bad thing about that is that it also, when you do submit something, when it goofs up, it shows it as loading constantly, I mean, for months, and I can't delete it out, and I can't stop it. So you do end up with a kind of a difficult situation. I kind of have to reset each one of the things. So just be careful of that. And if you do have a problem with in this class or with other classes with the app, that's not uncommon. I wish they would just fix it, quite honestly. And quite honestly, you know, the fact that it happens with Apple phones, which are, like, you know, the most popular phones in the world. I'm not sure why, but okay. So this is the grading for the class. You guys have probably seen this before. And these are the chapters. Now, these chapters, as far as the weeks are concerned, these are not in stone. They're, you know, it might change a little bit. So if we're at week 6 and you go, hey, you know, how come we're not on chapter 4? Don't worry about it. It's, you know, I'll figure it out what we need to do. And basically, I teach this class sort of to the CPA exam, and you know, there could be some criticism for that, but that's kind of the way I always taught it, and that it. I would imagine that people are at least considering taking the CPA exam, so I don't think there's anything wrong with teaching it kind of towards that. And not only that, the ACCT433 is the biggest organization, accounting organization in the United States. And stuff that they think is important is probably stuff that we should think is important. So anyway, so this is kind of how we're going to cover the class. There is a, I did format this thing weird. The only exception to these weekly things is this down here. We're going to do audit sampling. Will be done throughout the course. There's 3 handouts for audit sampling. Actually, we will probably start one today. The audit sampling, though, is I teach it throughout the course, and then there's an audit sampling test. It usually ends up being around week, I don't know, 13 or 14, something like that. And where you know, the whole thing is covered basically. So there's going to be 3 handouts for sampling that we'll kind of work throughout the semester. And probably when we do audit sampling is throughout the semester is, first of all, it's a fairly large area. And second of all, it kind of helps break up this other stuff. This other stuff can be a little bit dry. It could be the way I'm showing it, but okay, so you know, I think I did something. I think I goofed up my spacing up here. This is how I goofed it up. I thought I goofed it up down below, but I think it's here I goofed it up. This is the way it should look. Okay, and note the schedule can change for the instructor. And from page 5 on, this is kind of boilerplate, which you're going to see in all your classes. There's important stuff in there, especially the mental health stuff and all that kind of thing. If you have problems, basically where to go, whatever they are. But that's all going to be the same as all your classes. Okay. Question on that? All right. Well, oh, I got chat here with it. Okay.
I have a question.
Yeah.
My question is, are you going to give us handouts? Can the handouts be the main study material, or we need a book as well?
The handouts will be the main thing that we use. Yeah, the handouts are there. The main will be the main thing that we use for it. The book is not the class. So yeah, but again, we're probably going to use the book for a handful of things throughout. Usually one or two things a chapter or a section we will use. Yeah, so to answer your question more directly, yeah, mostly it's going to be the handouts. Mostly that's where we're going to learn the bulk of it. And my teaching of it comes from doing CPA reviews, basically, is what's on the CPA reviews, what do we have to know, and kind of in the format too that we have to know. I'll tell you this right out front, that the way they show sampling in the textbook is not usually the way you see it on the CPA exam. They usually don't have, it's usually not done the way that they show it there. Not that what they're doing is wrong. It's probably it was probably written by somebody who practices CPA, and their firm, this is how they did it. But at the same time, I try to keep it in the same kind of presentation that you would generally see in the CPA exam.
Okay, thank you.
Okay, so let's go ahead and next up, we will go to I think let's pull up the improving understanding and memory retention. You can't see what I'm doing, so there we go. Now, the reason that the reason I went to, first of all, just in general, I would have no interest in that topic at all. Memory, retention and all this stuff. And this came about really from the CPA exam. Is that how do you just so you guys know, studying for the CPA exam is obviously very intense, and usually it's over a very short period of time. It's a very intense, say 6 to 8 weeks. Some people say, well, I'll start studying for the CPA exam a year ahead of time. You're wasting your time. There's no way you're going to remember stuff a year in. So it's a very intense, very short period of time. You have to learn a whole bunch of stuff. So this is why I kind of became interested in memory retention, and not just, people saying, well, this worked for me, but actually looking at kind of the research of it. And so, these are some of those things that came up, and quite honestly, it was kind of eye-opening to me. But at the same time, that these are kind of sort of things that actually work, and the people that are in the field study it quite a bit. I'm not sharing it again. Okay. And by the way, this is not just for this class. You can do this for any class. Anything you have to remember a lot of information for. This is kind of how you do it. Okay, first things first. It's very important to for your mind to forget. It's very important for your brain to forget things. 99.999% of the stuff that goes into your brain is forgotten. Some of it is forgotten so quickly that you don't even remember it happening. If you're standing outside, you're walking down the street and 10 cars walk by, you probably did not consciously think about what color those 10 cars were. Your eye saw it, it went into your brain immediately said, forget it. And in a hundredth of a second or less, it didn't register anything in your brain. So your brain automatically forgets a vast majority of stuff that goes into it. And it's set up to do that way, to be that way. So the question is, okay, well, how do we then sort of, I don't want to say trick the brain, but how do we use that to what do we use to put things into longer term memory for the brain? Okay. To get elements into long-term memory, we need to actively stimulate activity. And this is a synapse structure of a neuron, blah, blah, blah. Synapse plasticity to strengthen or weaken over time. So you can strengthen it by actively using it or weaken it by time. For instance, what was your room number in your third grade? Well, at the time when you're in third grade, it was probably really important, but over time you haven't needed that, so you probably forgot it. So things strengthen or weaken over time. And the question is, how do we strengthen those things? This is very important. The strengthening of a synapse need to be done before short-term memory is off. It must be done within seconds. And anything that strengthens the synapse adds to deeper understanding. Okay, let's stop right here. So anything done in the brain will strengthen the synapse, whatever is happening in the brain when you learn something. So you find something that's happening. Now, remember, your brain is very complex. A lot of things are going on. Talking is done using your brain. Writing is done using your brain. Right? Those things attached to the activity strengthen it. I know that sounds odd, but it doesn't have to, it's not all mental. They're not talking about having to do mental things all the time, but other things. So if you read something and say it out loud, it takes a lot of brain power to talk. Look at little kids. It takes them 2 years or whatever to learn how to talk. It's hard. It takes a lot of brain power to do it. You don't think of that because we talk all the time, but it does. So when you learn something, any activity that your brain does will strengthen it. Whether it's talking, it could be writing, any of that stuff will strengthen it. So it does not have to be simply academic types things. It could be other things that are not academic. Okay. Ways to improve memory. Taking notes by hand. And I know that I just talked to you guys about, you can write right in the document and all that kind of stuff. But writing is actually a very, very good way to get things into your brain. And the reason being, if you type the letter S into the keyboard, you hit S, it doesn't take as much brain power as actually writing the letter S, where your brain has to tell the hand, hold the pencil, or pen or whatever, and, use this much pressure and, guide it around. It takes a lot of brain power. It's inefficient, which is good because we wanted to use a lot of excess brain power to build up that kind of web around whatever the topic you're studying. So the more, the problem with computers is they're efficient. They don't take much brain power. It's very easy to get an S on the keyboard and put it up there. It's a lot more difficult for your brain to actually write it. But that's what, in a weird way, you're trying to make whatever it is you're doing inefficient so that there's more brains used. It builds up that web, and there might be a quicker way of learning stuff. So it's kind of a different way of thinking of things. Okay. Reading notes out loud. Again, talking is a difficult thing. So speaking out loud, even better than that is having discussions with classmates. Discussions with classmates will have that back and forth where your brain has to respond to something that is said. So it's not a bad idea to have a study partner. You take the CPA exam, go back and forth. Talk about things. It's using brain power to think about it, respond, again, with the inefficient talking, but that'll build it up. Repetition, doing things over and over and over again. We used to laugh about people that they say, oh, back in the day, we had to write this 100 times, and that's how you remembered it. it's actually not a bad way to do it. Repetition is not a bad way to do it, right? And the more times it goes through something, the more strength that you have, the more proteins, whatever, build up between those two, the different things in your brain, the web in your brain, or whatever the topic is. So repetition is actually a fairly effective way of remembering things. This is the one you probably get most of the time. Memory triggers. It could be down here in pneumatic devices. A lot of times you have a song, a rhyme, an acronym, and we do use these in auditing. Guided readings, fill in the blank flashcards. This is the one that's probably the most unusual, and that is color-coded writing or using color like highlighting when you're doing something. I know it sounds very strange, but we'll do it this way. Most mammals cannot see color. They don't need to. Humans are one of the very few mammals that actually can see color, at least in a wider range of colors. So the brain power that's necessary to see color is huge. It's a big part of your brain goes to seeing color. Like most animals don't. If there's a coyote looking to find bunny rabbits in a field, seeing color isn't going to make any difference, because you're not going to see the bunny in the field anyways, and that's not how you're going to find it. You're going to smell them or whatever. So they have no need to see color. And if you're the bunny rabbit, it doesn't matter what color the coyote is. You just got to get away from it. So you have these big ears, to hear when the coyote is going, so you know when to run away. So most animals don't have the ability to see color. Humans do. It takes a lot more brain power. Now you don't think about that. You don't say, gee, this is this is a color green. This is oh well, that's a lot harder for me to see, because you don't think that, but that actually is what's going on. And remember, this is sort of an inefficiency of the brain. It doesn't need to be green. You don't need to see it, but you are seeing it, and it's harder for your brain. It takes more of that web to build up. It does, so color coding things is an important one. Have any of you guys ever had Dr. Knudsen in the class? I don't know if you ever had him. He's a curriculum chair, but he he color codes everything. If you ever look through his books, I mean, his books are like virtually everything in there is color coded, and it makes sense. Write down things from memory. That's obviously a good one. And another odd one is studying before you sleep. And you study something and go to sleep, it usually is more likely to go into longer term memory. And if you can do it, if you study something, sleep, you don't take naps and study, you can kind of do that around the clock for at least some part of the time. That's also a good way to do it, which is another kind of odd thing. But anyway, so this is kind of how to remember things. And again, it's not just for this class, as it really it's just happenstance that it relates to our auditing. But yeah, so that's kind of how you remember stuff. And so you say for the CPA exam especially, remember that kind of stuff, because that kind of stuff, it does make a difference. And again, you can use it in any classes that you have, but especially for something like the CPA exam, we have a ton of material, very short period of time. How do you get it all in so that it's right there that you can remember it? That's one way you do it. Okay. Well, let's go ahead and start in chapter 1 and 2 handout. What I plan on doing is doing a little bit of the chapter 1 and 2 handout, and then the second part of the class, I think we'll do a little bit of the sampling, just kind of break it up a little bit. It's a little more active, the sampling. So anyway, okay. So let's. Any questions or anything? Okay, so what we're going to start talking about are corporations, and simply because corporations a lot of times are tied with auditing, and we'll talk about that a little bit later. But just so we're all kind of just kind of remember what corporations are and why they're there is, I know you guys have seen this before. Corporations are a legal entity in that they're separate from the owners. So a corporation is actually is a right granted by the state. It's actually creating sort of a fictitious person that is separate from the owners. So IBM is separate from the people that own IBM stock. IBM is its own entity. And they have basically most, the rights that most people have, except for voting. They can, they can sue and be sued. They can buy property. They can buy land and equipment. They can enter into contracts. They can do anything that a person can do, except for voting. And they're completely separate from the owners. And that's going to lead to kind of a problem that we're going to talk about in a few minutes here. So corporations are separate from the owners. Because they're separate from the owners, there's a limited liability in that your investment in, say, IBM is limited to your investment. They're completely separate from you. So if IBM goes bankrupt, which I kind of doubt they're going to do, but if IBM goes bankrupt, you might lose your investment, but you're not going to lose your house and your car and boats and whatever else you have. That's completely separate from you. That's like a separate person going bankrupt that is not you. These are granted by the state. So states grant corporations, and they have all states have their own rules for corporations. So they're granted by the state. And in Illinois, you can fill out a form basically, and you can get a corporation, incorporate in state of Illinois or in Wisconsin or wherever. But every state has their own rules. And they're granted by the state. Back in the day, you used to have to go through the state legislatures and actually get a grant from their assemblies to get a corporation. Now it's much easier. Some of the railroads are still under those. they had some corporation grant from the state of wherever, state of New York, and they're still operating under an incorporation that came from way back when. Corporations may have one owner or millions. Maybe privately traded or publicly. Okay, here's our first auditing words. Privately traded companies are called non-issuers. Maybe I need to make that. Wait a minute. Publicly traded companies are called issuers. When you're taking the CPA exam, they will use these terms. Privately traded, non-issuers, publicly traded are called issuers. Non-issuers means that they don't have to issue financial statements according to the SEC. Publicly traded means they do. We'll get to that in a little bit here. So private companies are called non-issuers, and that is exactly how they'll term it, non-issuers. I don't think they hyphenate it though. And publicly traded companies are issuers. So that's a little bit of terminology, and that's just came about in the last few years. Okay. Owners do not always participate in management. Now, this leads to a problem. You know, if I participate in management, let's say that I own whatever. Let's say I own a restaurant and I participate in. I'm a manager of the place. I run the place. Okay, I should know what's going on in that place, right? I'm a manager. I'm in the place. However, it's possible somebody owns stock in a restaurant that has no idea how to run a restaurant. That's one of the beautiful things about publicly traded companies, is that especially that you can buy stock, and even if you have no idea how to run a restaurant, you can invest in Olive Garden or whatever restaurant chain or whatever. So that's the beauty of it. You can do it, but there's a problem. The problem is, if I'm running the place, I know everything that's going on. I know what's happening. If the owner isn't running the place, it becomes more difficult. They have to somehow be told how the place is running, right? I mean, if I own stock in the Olive Garden, I can't go into an Olive Garden and start going through their books or whatever. Olive Garden is a completely separate entity. It's a person. You can't go on their premises, unless they allow you. So the question is, well, what do we do with it? Okay. So, the owners don't actually don't actually manage the place. So that's one of the problems. And so they say, okay, well, so management needs to put out financial statements to let people know how they're doing. There's a problem with that too. If you're a manager and you want to keep your job and the place isn't running well, you could put out fraudulent financial statements to show that it is running well. Okay, so there's a problem there that you have, that they will not be on the up and up with their financial statements. And by the way, this was not uncommon back in the day to have these kind of things happen, that they would have people put out misleading financial statements and commit fraud, basically, with routinely. Okay, so here's the solution, and this is kind of the whole thing about auditing in our CPA exam and all that. External auditors, CPAs, will audit the financial statements of a corporation before the financial statements are issued to the public. So external auditors will come in and do an audit of the financial statements. They are separate from the company. So for instance, the external auditors are not IBM employees. They're not IBM investors. They're completely, supposedly anyways, they're completely objective, as objective as they can be. And they'll come in and look at the financial statements in this auditing. The ability to do this is the entire CPA license. Oops. In reality, the license of a CPA, this is the only thing that it grants you the ability to do. Only licensed CPAs can perform financial audits. So no one else can do it. Kind of like practicing medicine. Unless you're a doctor, you can't practice medicine. Unless you're a CPA, you can't do an audit, a financial audit. And so that is the license. It's a license, and as a license, or like a driver's license, you by a state, you get to prove to them that you know what you're doing. The main way to do that was with the CPA exam, and it's a license that you can perform audits, and that's it. It's a very narrow, actually. The actual CPA, as far as the licensing is concerned, is very narrow. It's only for performing financial audits. So you might ask, well, if I'm not going to perform financial audits, do I need to be a CPA? No. but it is a very recognized degree, and it's probably the most recognized in accounting. So that's why people, even if you're not an auditor, you probably would want to have it. Okay. So here's kind of what happens. So IBM issues financial statements, and external CPAs will issue an audit report to include the financial statements. The audit report will include any material misleading information. Okay, so it's sort of like this. IBM issues these financial statements. And if not, let me do it. So these financial statements are issued. The audit report will go along with it. And if there's anything wrong with the financial statements, it'll be included in that audit report. So you read the audit report to see if these financial statements can be relied upon. And this audit report can only be done by licensed CPAs. Oops. If you're not a licensed CPA, you cannot do that report. Question on that? Okay, next thing we're going to do is go over, and I think we'll actually do that. We'll probably take a break. We're going to go over the actual audit report. Now, as you could probably imagine, you do all your, you come in, you do the audit. They have all their numbers on their financial statements. You go through those, figure out which ones are important, where the problems might be. You look into them, and you do all your work. And this could be weeks, maybe even months. You know, usually like say 3 to 5 weeks, usually for CPA firms. You get all your information, you get all your data, you get all your evidence to show, you know, good or bad, to show whether the financial statements are fairly presented. And then you write the audit report. So the audit report is really sort of like the last thing you do is the audit report. So what we're going to do is go over the audit report, because it's important to know what, you know, what the finish line looks like. What are the things that are important for the audit report? So as we go through here, we're, you know, this is sort of like the last step, but it kind of shows you where audits are, what they're aimed at. And this is one of those areas that is very, the public's perception a lot of times is very different than the reality of it. So anyway, enough talking about it. Let's take a look-see at it. Okay. So this is the audit report. This is a unmodified opinion. This is new terminology. It used to be called, you know, a clean opinion. It used to be called a unqualified opinion. So this is a clean opinion. This opinion that we're looking at, this is for non-issuers. And we'll talk about those in a second. Okay, so who is the audit report aimed at? It's aimed at, usually the shareholders and the board of directors are the most common groups that it's aimed at, not management. IBM management made the financial statements. They should already know about the financial statements. So we're aiming this at people who are not part of management. Management made the financial statements. They should already know about them. It's the people on the outside, people on the board of directors, specifically outside directors and shareholders, and even the general public, and for it's publicly traded, will have an interest in it. So you don't aim this report at management. They're the ones that made the financial statements. Okay. And by the way, this kind of format of this audit report is kind of the way that all the reports are for the for doing auditing. All the audit reports. There are different types of reports that they put out. They all kind of follow the same format. Okay. Well, the first paragraph is the introductory one. And it just says what we did. We have audited. You're telling them that it was an audit. And you'll notice that it kind of, oopsie, kind of goes through, what do we audit? The balance sheet, statement, changes in shareholders' equity, and cash flows for the years that ended. And this is new, the notes to the financial statements. Oops. I'll tell you something funny about the audit report. When I was taking an exam many moons ago, they used to, one of the ways that they would test it would be, they'd say, write the unqualified audit report. And you'd write verbatim the whole thing out. And if you memorized it, like most people did, they asked you that question, you said yippee, because you knew you'd probably pass the exam. If you didn't memorize it, you'd say boo-hoo, because you're probably not going to pass the exam if you didn't memorize it. But anyway, okay. Management's responsibility. So this is not managed. So for instance, this would be, for example, IBM. This would be what IBM's management. What's their responsibility? So management is responsible for preparation and fair presentation of the financial statements. So they must make the financial statements. And they're responsible for internal control. So two things management's responsible for: the financial statements and the internal controls. So I'm going to stop right here for a second. Notice the CPA firm is not responsible for financial statements or the internal control. IBM's responsible for their internal controls. IBM is responsible for their financial statements they put out, not the CPA firm. So the financial statements and internal controls are management's responsibility, not the auditors. Okay, and this, by the way, is what I would say boilerplate. Every single report is going to have this in it. The management's responsible for financial statements, management's responsible for internal controls. Okay, well, we go to the auditors, sometimes called the accountants, responsibility. I know that sounds kind of funny, but CPA is certified public accountant. So when they say accountant, that's what they're talking about, the accountant and the CPA. So auditor / accountant is, and if you're taking the CPA exam, sometimes you'll see they'll say the accountant, ask the client about this. The accountant they're talking about is the auditor. So sometimes that term accountant is used as the auditor. Okay, so there's 3 paragraphs. And so, the 3 paragraphs, I've broken this up into each sentence. So this is actually be 1 paragraph, be 3 sentences long. And My reason for doing that is that each sentence is kind of important on it. Okay, the accountant, their responsibility is to express an opinion. So the CPA firm is not responsible for financial statements or the internal controls. They're responsible to express an opinion. This audit report will have an opinion in it. That's their responsibility. They're not responsible for these. The CPA firm is responsible for this, the audit report. And the audit report will have an opinion in it. Okay. We tell what country that we had, that we use for the our standards. Usually in the United States, it's going to be the standards of the United States.
Professor, I have a question.
Yeah.
Like, what do you mean by express an opinion? Like, what kind of opinion they are supposed to express on these?
You know, actually, let's jump ahead here. That's an excellent question. If you go on to the next page, this is the opinion. So this is what you're required. This is what is required by the CPA to express. Probably should put a D on that. So as an auditor, you're required to express an opinion, and this would be the opinion. And we can talk about this one right now, since it does matter, you know, because we're talking about expressing opinion. This would be a clean opinion, and this would say that in our opinion, things will present fairly. And we'll talk about this a little bit more when we go back a little bit. In all material respects, again, we only look for things that are material. And we'll talk about that in a minute. You know, a dollar, something being off by $5 probably isn't going to change anyone's opinion. So we only look for things that are material. And it says, you know, this is the financial position, which is basically another term for the balance sheet. Results of operation is income statement and cash flows for the year then ended. And then we tell which accounting principles we use. And in this case, the United States, usually it could be international standards. But this is the opinion, and this is a clean opinion. So this is the clean opinion, and this is what most companies get. Now, here's the thing about an opinion. You'll notice that it's not saying it's a statement of fact. Right? You know, in my opinion, the best color is blue. Okay, prove me wrong. You know, now we have a more of an informed opinion, obviously, when we're going through this, but at the same time, it is an opinion. It is not a statement of fact. It's an opinion of the, you know, which means there's judgment involved. You know, in our opinion, we believe the financial statements present fairly in all material respects the financial position, blah, blah, blah. So, you know, it's an opinion. And this is one of the things that people sometimes get, you know, that they think that it's a statement of fact, that a company's, that the CPA firm is actually saying that they have, you know, 100% knowledge of it, and they don't. So this is what they're required to do. They're required to put an opinion. Now, again, it's an informed opinion. They go through great lengths to make the opinion based on their evidence, but that is the opinion. So this is really what we're talking about here when we talk about the opinion. It's the very last paragraph, usually, of the audit report. And that's what we're required to give. Okay. Yeah, so we have to express an opinion. We have to give an opinion, and there is a kind of a extra wording on some of this. We have to express an opinion. There is possibly that you don't give an opinion if you can't get enough evidence. You can't get an opinion, but that's a very rare thing to have happen. Okay. This is probably the most important sentence in the whole thing. This is one that people miss. And that is, the audit is to obtain reasonable assurance. So, do we get absolute assurance? No. We do not get absolute assurance. We get reasonable assurance. Usually there's testing involved, you know, whatever. 90% level, 95% level, 99% level, whatever it is. We get reasonable assurance. We do not get, you know, 100% total assurance on any of this. You don't get complete assurance. It's reasonable assurance. But whether the consolidated financial statements are free of material misstatements. So again, we only look for things that are material. So reasonable assurance, not 100%, you know, assurance. We give reasonable assurance. You know, it usually is a high level, but reasonable assurance. Well, things are free of material misstatement. Okay, so misstatements. You're doing an audit and you find a $5 million error. Is it material? You found an error that has for $5 million. Is it material?
Yes.
Yes, it is.
It actually depends. And what does it depend on?
On the company side of the company, because $5 million for Google won't be as much as 5 million for like a local company.
That's exactly it. It depends on the size. Yeah, Google, you know, Walmart, something like that. $5 million, they probably make that every 15 minutes or something. It won't make any difference on the financial statement. So $5 million to a really large company, you're not going to do anything with. Even if you find it, you know, you probably tell them about it if there's an error, but you know, if they don't make the correction or whatever, you're not going to worry too much about it. So $5 million. Now again, a smaller firm, you know, if it's a company that has you know, 80 million in sales and they have a 5 million, that's a big deal. But if it's so, it depends on the size of the company. So what you're looking for, so material misstatement, it means it's material to the company itself. And sometimes you'll see, you know, oh, look at this in person, you know, this employee was embezzling $100,000 a year from Walmart for 10 years and the auditors never caught it. Of course they didn't catch it. They were never looking for it. And you know, $100,000 a year, what, $1 million over 10 years. And quite honestly, to find errors like that, it would cost way more than $1 million to find it. It wouldn't be cost effective anyways. There is a myth that auditors find most of the lights on here, that auditors find most of the fraud and all that. They actually don't, because most fraud and most things like that are smaller. You know, it's only the big stuff they find, because that's only the stuff they're looking for. An employee stealing out of the cash register, auditors are never going to find that. They're not looking for it. And that's one of those things that the public perception is different than the reality of what auditing actually is. So we're looking at the financial statements. That people can look at the financial statements and rely on them. We're not looking for all fraud or anything like that. Okay, so then this will go throughout our class, especially in the statistical part. It'll go throughout the whole thing. That we don't look for absolute assurance. Okay. So what do? We obtain audit evidence. And this evidence is basically all the stuff that we do to figure out whether we can rely on these financial statements. So we look for any evidence, and evidence will be anything that, we'll talk more about this later when we go through the evidence chapter, but anything that corroborates or refutes the management, management's, when they give you the financial statements. So evidence will either support what they're doing, say, yes, this number is right, or no, this number is not right. If it doesn't do either of those two things, it's not evidence. So we'll take enough audit evidence. And we talk about this as auditor judgment, as far as what evidence to get. And by the way, that's a very important one too, because when you talk about auditor judgment, let's think about this for a moment. Does that mean that all auditors are going to do the same procedures? If they're using their judgment.
No.
Yeah, no, they don't all have the same judgment, right? And there's nothing wrong with that. If you think about if you wanted to drive a car to Toledo, there's probably more than one way to get to Toledo. As long as you get to Toledo, it's fine, whichever way you choose. So auditor's judgment is not, that's not a bad thing. And some auditors will get the evidence differently than others. So auditor judgment is basically that. It's their judgment. Okay, material misstatement. We talked about this. Now this is the kind of the new one. They will actually come right out and say for fraud or error. And so you're looking for misstatements that are due to fraud or error. In the past, they just said you're looking for misstatements, but now they say they're looking specifically for fraud. So you'll actually have to look specifically for fraud or errors. And quite honestly, a lot of times, especially for the larger misstatements, many times they are fraud, because a lot of times if there was an error, someone put in an extra $6 million and whatever, someone would say, what is this? So a lot of times it is actually fraud when you look at the financial statements. Okay, number 6, auditors consider internal controls. The company, so how are they controlling their operations? And we have 2 chapters on that we'll go over. We do not express an opinion on internal control. We only express opinion on the financial statements. So if you see a company that has a bad internal control, is that going to go in our audit? No. Let's say it's a jewelry store. The jewelry store leaves the door wide open at night. They don't lock the door. Well, that's very bad, and it might influence your audit. What in the numbers, you may have to do extra work because of it. You don't put that in the audit report. First of all, you don't want to put in the audit report because anyone would know the front door is never locked. But yeah, so we for the non issuers, we do not do a issue opinion on. Really, we express no opinion. Okay, 8, it talks about the appropriateness of the policies and all that kind of stuff. Okay. Number 9 is a standalone paragraph. And this says, we believe that our audit evidence, and that's the only thing we can rely on, is sufficient and appropriate to provide a basis for our opinion. So we can only issue an opinion based on our evidence. Can't be anything else. So if management says, well, look, I tell you what, we'll sign a piece of paper that says if there's anything wrong, that we're 100% responsible for it. So, you can give us a clean audit report because you have this piece of paper that's a legal document that will say if there's anything wrong, we're responsible. You can't, your opinion has to be based on evidence. It cannot be based on anything else. So audit evidence is the only thing that you can base your opinion on. Okay, and then here we have the signature of the firm, and so yeah, hopefully that gives you some kind of insight into kind of what, so this is the end of the audit. This is what you write at the very end of the year after you've done all your work. So the question is, how do we do our work? We do our work basically to conform to this. You know, and the big things being the reasonable assurance, and we look for material misstatements. We don't look for all misstatements. That would be a waste of money, basically. We're looking for reasonable assurance about whether the financial statements are free of material misstatement. Question on that? Okay, let's take a break. Let me save this. And when we come back, uh-oh, did I put it in here? Oh yeah. Did I send you guys the classical sampling classical sampling?
I think so.
Yeah, okay.
Yeah.
So we'll do one of these next. And this just you know, so you probably notice this can be a little bit rough to kind of hang in there for. So let's take a break and let's say we'll be back. What is it? 7:09. How about we be back at 7:15 maybe? Like a 6-minute break. Get up, walk around. Okay. Yeah, so go ahead and pull up the classical sampling one and we'll go through it. Okay, let's go ahead and get started. So classical sampling. So just in general, sampling is just in general, sampling is that you take a small group and project it over the entire population. And so, you know, it's the same for all sampling. And, you know, especially you find it now, you know, the big thing was the COVID thing. You know, the idea for sampling is that you first find a pen. You take a sample and then you project it over the entire population. So, you know, for COVID, you know, for seeing if a vaccine works, they'll sample it on some people and put it over the entire population. Now, the sampling, you know, is done for being more efficient, but also there's some things you can't do. It's impossible to do 100%. It's impossible to get the whole entire population of the planet, all 7 billion people, to take your vaccine and see if it works. So you take a small amount and you put it over the entire population. So you know, you find out that it's 80% effective. You say, okay, well, it's going to be 80% effective for the entire population. So this is, you know, sort of the idea behind it. Sampling, you take a small amount and put it over the entire population. And so, and a lot of times you can get very, you know, a very tight, you know, 99% assured with a fairly small sample compared to the entire population. That's not unusual at all. But there are things that it's impossible to do even in companies. For instance, if you were to audit Walmart and want to audit their inventory, you could not do that 100%. It'd be impossible. There's not enough auditors in the world to go around to all the Walmart stores and warehouses and all that kind of stuff and do the count at the end of the year and blah, blah, blah. It's impossible. So there are things that are impossible to do 100%. But also a lot of times you can get, you know, really confident with taking a smaller number and using statistics to get that, you know, get the sample, see what happens in the sample, and then projecting it over the entire population. Okay. So we have this accounts payable book value is 5 million. The number of accounts payable is 1,000. So there's 1,000 items in accounts payable. And we've taken a sample of 10 accounts. So out of the 1,000, we've taken 10 accounts. And we're going to use those 10 accounts to, as our sample, to project that over the entire population. Okay. So the first things we need to do are to I don't know why I have this centered. Odd formatting I have here, and I apologize. Okay. So these are the book value. This is what the client gave to us. So when we looked at these items, item 1 through 10, the book value they gave, these were what the book value were. Over here, this is what the auditors came up with. So the auditors looked at those same items and said, okay, look, you know, this is what we came up with for the total. Oops. What we came up with for the total of those. So this is the client. IBM or whatever it is. And this is the audit. So easy peasy. How do we calculate the average audit value for our sample? Oh, come on. You guys are toying with me. The total we came up with was 54,240. So how do we get the average?
I guess you divide it by 10.
Yep. So we're going to take 54,000. $5,424. So this is our average audit. Hey, that changed. Something goofy with the formatting here. Okay, and we're gonna do the same thing for the book. I'm not sure why I did it this way. As far as the formatting here. All right, so so that equals 50, 10. Okay, now again, this is only for the sample. This is not for the entire thing. We didn't test all. Oops. We didn't test all 1,000. This is the total number of accounts payable, 1,000. We only tested 10 of them. So, but our average was this. I did that wrong, didn't I? That's right. The audit average was this. And the book average was that. Okay, so now what we're going to do is we have these averages. What we're going to do is figure out how to switch cameras. No, that's what I'm figuring out. What we're going to figure out is, okay, so we got this, we have the audit average, and we have the book average. Just that quickly, I forgot. So here's our sample. Oops, skip that. Here. Stop that. So here's our audit average. There's our book average. So we're going to take that and we're going to now project it over the entire population. And there's 3 ways that we can do it. Turning off my video is not one of them. Okay. And I think I'm just going to copy these down to the next page just because it'll make it easier. You don't have to do this. I'm just Okay, so again, okay, so calculate projected and projected value and predicted misstatement using the following three classical sampling methods. Okay, so these are the three methods: mean per unit, ratio estimation, and difference estimation. And we're going to do one of each of these. Okay, mean per unit. Now, the word mean is the same as average, right? This is the same as average. Now, here's a question. Whose average are we going to use? Our average or the average that the client gave us? The audit average or the book average?
The book average?
Actually, we're going to use the audit average. We're going to use what we came up with. And we're going to use that to estimate how much the total population is really valued at. And so here's the kind of the formula. We'll use the audit average. Times the number of items in the population and that will equal our projected value. Okay, so we're going to take the audit average. So in this case, it would be that. Times the number of items in the total population is that. So 1,000 items. So here's what we're saying. We're saying, look, we came up with an average of 5,424. There's 1,000 items in your population. Each one of them should be worth 5,424. So we'll use that for a projected value, which is so this is our projected value. Should probably make that a color. Make that. Okay, so this is our projected value. Now we're going to compare that to our total book value. Okay, so how much are these? What is the misstatement that we're projecting this to be? We came up with 5,424,000. The client, you can't really see that. Let me change the color on that. the client says that it's worth 5 million. So what's the misstatement?
The difference?
424,000.
Fonts are a little kooky here. Okay, so those are projected misstatement, and still a little kooky here. All right, so this is a projected misstatement. Now, this is the tricky part. Projected misstatement. Is it overstated or understated? So they have a book value of 5 million. And we're saying it's misstated by 424,000. So their 5 million, is that an overstatement or an understatement?
Understatement.
Yes, excellent. Yep, so the projected misstatement is the difference between those two. Even minus or something like that. But anyway, yeah, so this would be an understatement. They're understating it by 424,000. So just to get back to this, you know, we projected that this should be that's what we projected using the mean per unit. That this should be the entire population. Okay, ratio estimation is another one that we use, and the idea for ratio estimation is that there's a ratio. You know, these two are off. There's some ratio that it's off by, and quite honestly, this kind of makes sense if you think about it for most things. And that is, bigger items will probably have bigger errors than smaller items. You know, if you have something that has a value of $12,000, it's not inconceivable that it would be off by $800. If you have something that's $20, it's probably not going to be off by $800. So there's probably some ratio of, you know, between those of what it is, you know, of what's off by in the sample. So that's what ratio estimation is kind of looking at. So ratio estimation, we take the audit average divided by the book average, and we multiply that by the total book value. And that will equal our, oops, that's not minus. That will equal our projected value. Okay. Okay, so our audit average is this. that. Times the total book value is 5 million. It should be underlined this. And this will equal our projected value. So, time for Mr. Calculator. So 5424 divided by 50 equals 1.061. So multiply that by 5 million. Round off the nearest dollar. I'm going to say 5 million. 307. 240. So this will be our projected value.
So is it not 241? The last,
It could be.
because it's 0.7.
70, right, you rounded to the next.
You'll notice my very inexpensive calculator.
Oh, okay.
So yeah, it very well could be.
Okay.
Yeah, sorry about that. I should probably upgrade it. All right, so so this will be the projected value. And again, we're going to see what the misstatement is. Check the misstatement will be the same as we did before. 307 something. This is our projected misstatement. And this will also be a understatement, right? We're saying that they should have 5,307,241. They only have 5 million, so this is a understatement of. Oops. Okay. Difference estimation. I'm not going to be able to fit this on one page. Difference estimation is you take the difference between the two, the audit value and the book value, and you multiply that by the total number of items in the population. So it kind of looks like this. It's very similar to this one, the setup, except that it's the difference that you're using. So it'll be and this is a little bit different in that this will be the projected misstatement. That's not how you spell misstatement. That's not how you spell it either. Okay. Yeah, the total items for the misstatement. Okay. So this, you get the misstatement first. And here's the idea behind this one. The idea behind this one is that you're saying, okay, everything's off, whatever this is off by, everything in the population is off by that same amount. So everything is off by, if this is off by $10, everything in the whole population is off by $10. Every item in the population. And we'll talk about when we when we use these different methods. But so this difference estimation is, okay, here's the difference, and then everything is off by that difference, whatever it is. Okay, so on an average is this. I'll clean this up in a second. Okay, so and the total number in the population is 1,000. And this is a projected misstatement. So it's a little bit different than before we're doing so this would be, what's 5? $314?
Yep.
Okay, so 314, so this is off by 314,000. So this is the projected misstatement. This is not the projected value. So this is kind of a different way of looking at it. Now, so the audit is higher than the book average. So are we saying that their books are understated or overstated by the 314?
Under.
Yeah.
Because
Yeah, we're saying they're understated. Okay, so a little bit tricky. We have our accounts receivable payable book value. Okay, so what should be the projected value of this? 5,314,000. Larger. So this would be the projected value. So this one's a little bit different in that we actually kind of go in reverse. We find the misstatement first. And then we back into the projected value. And this one says, okay, everything's off by the same amount. This would be if there's a common error that means they're off by the same amount. For instance, maybe shipping is a set price, that they keep forgetting to put shipping on the invoices or whatever. So if it's likely that it's going to be a set amount that they're off by, this is the method that can make sense to start using it. Any question on that? And again, what we're doing here is simply projecting it over the entire population. So we're taking a sample and projecting over the entire population. The data is the same. It's just that the methods, ratio and difference estimation and the mean per unit, they will just give us a little bit different projection over the population. Let me write these in real quick.
I have a question.
Yeah.
So let's assume it was understatement. That means that we're going to subtract the 314,000 from the 5 million. Is that right?
Actually, you're going to add it onto it. You're saying that they're understated.
No, I'm saying if it's the opposite, if it's overstated.
Yes, exactly. Yeah. So yeah, if these were reversed, absolutely. If these were reversed and it was negative,
yeah,
we subtract it from it. Yep. And we're going to find out on the next one that is you can actually get like one way it can show overstated, one way it can show understated. So anyway, this is kind of the wrap up of this thing, is that the entire population. So this is mean per unit. This is the ratio estimation. Oops. This is the difference estimation. By the way, you're probably looking at my handwriting and now you realize why you do stuff on the computer rather than doing it by hand and showing it that way. But yeah.
So like Professor, in the difference estimation method, without knowing, like we just knew that the misstatement was $314,000, but without knowing the projected value, how can we like come to the conclusion that it's overstated or understated?
Because
we are,
it's going to go by each individual item. Each individual item, the $314 was an understatement. Oops. Let me get this out of the way here. You know, we thought that each item should be 5,424. When we did the sample, they came up that they were 5,110. So we're saying that each item in there was understated by 314.
oh yeah, that makes sense.
Yeah, so it depends on this. So it's for each item. Now, you know, if we said 5,424 and they came out to be 5,424, we'd say, okay, there's no over or understatement. And again, if we would have came up with 5,424 and they came out with 5,600, we'd say, okay, they're overstating these. So it depends on this, you know, which way this goes. And so this is the audit, and this is the one that we're more sure of, right? We actually went through and got these numbers for ourselves. This is what the client says it is, the book value. We haven't gotten into it, and we won't get into it for a little while, but one of the things you got to remember, one thing that's true about auditing is not all evidence is the same, but evidence that you gain yourself by your own observations, your own calculations, is more persuasive than something someone else gives you, right? So what you come up with for yourself, that's the more persuasive evidence. So they gave us the book values, which there's some, it doesn't like completely dismiss that, but they give you, but those numbers that you come up with yourself, those are the numbers that you are more confident in. Those are the numbers that you are more persuasive to you that, those are the right numbers. So for example, you especially see that up in this one. In this one, the mean per unit, it ignores the book value. It says, look, we calculated these, it came out to this, they should all be this amount, and this should be the total. Yeah. These other ones take into account the book value, the book average, but this first one completely dismisses the book average. So now we're going to deal with that. That's, that's something else. We're just going to take the audit average and use that to project it. So the evidence you gain yourself is more persuasive than evidence that is given to you by somebody else, and in this case, the book value. Question on that? Okay, well, I think what I'm going to do is there's a second one here. Actually, I think there's a third one too. There may be a fourth one, is there? There's a fourth one. What kind of crazy person made this handout? Okay, so this is so I think we're gonna end it here just for now. We'll talk about anything you want to talk about, but for next class, see if you can work number 2 on your own. We'll go over it, but see if you can figure this one out on your own. It's so be careful. There's only 5 items in the sample. There's not 10. This is the.
That's overstated.
Oh, what did I just do with that? You can't even see that. Yeah, exactly. There's going to be some that are overstated. Now, you be careful on this one, though. They're actually, the mean per unit one is going to come up in a different direction for overstated and understated as the other ones.
Okay.
So just so if you come up with the mean per unit is overstated or understated, and the other ones are the opposite, you're not doing anything wrong. Don't think you're doing anything wrong. It's just the method. So we'll put this. So next time, just take a crack at this one and see if you can figure it out. And I know you guys probably had statistics before, but this is just kind of a more directed at auditing kind of form of it. And, yeah. So anyway, any questions on this?
No. Are you gonna save this on Blackboard? What you did?
Yeah. Oh, so here's what we're gonna do, and in Black. So hold on to this handout and the chapter 1 and 2 handout. Hold on to both of those, and we'll submit them later. Nothing's due for next week, but see if you can figure this one out for next class, and we'll go over it. That should be it. Do you guys have any other questions about anything about the class or?
One question: are you gonna upload this recording?
This recording will be uploaded. Well, it should be uploaded by midnight. I think I say in the handout 24 hours, but it should be uploaded by about midnight. And here's what happens. The reason why there's a delay. When I stop this meeting, it's going to render it. It takes about between a half hour and 45 minutes to render it. Then I edit it because I have to edit out the blank spots, and I have to edit out the blank spots because when I put it into YouTube, YouTube will not put closed captioning in, which is required by the Disabilities Act. And then I got to load it into YouTube, and YouTube would render. So basically, there's 3 renderings: rendering from the video, here. Then I take it, I edit it, renders it again, and then it renders into YouTube. I know it's a pain. It seems completely bizarre, but that's how it works.
We appreciate
Anyway,
it.
so by midnight, it should be in.
Okay.
Well, long story short, by midnight.
Professor, I looked for that book on the website you gave us, but I couldn't find it. I mean, I already ordered it from another website. It was $70, but I was trying to go with a cheaper version. I couldn't find it on the website you provided.
Let me see if I can pull up the, give me a second here. So this is it. Let me see if I can- Let me get the okay. Here, I'll tell you what. Let me put it in Blackboard. How about that?
Yes, please.
Okay, I'm gonna put it in the syllabus and info. Check to make sure it works. Something here. Let me make sure this link works. Okay. Yeah, so look under the syllabus. And again, I use PayPal. I'm not familiar with this with the C textbook. I was actually just looking to buy it because I couldn't get it from the publisher first. I can't get anything from the publisher. I can't get them to return my emails. So anyway, this is the book. It's $13 now. Is if they don't send you anything, it's a download.
Okay.
So you're not going to get a hard copy or anything like that. So it's a download, and it's all in PDF form. And yeah, so just know that if you want a hard copy, then you do have to go to someplace else.
Right, which I got it. It's supposed to,
Yeah.
I'm supposed to get it within the next few days. Mhm.
Yeah.
Professor, like, is there's a difference between the 10th edition and the 11th edition? Like,
There shouldn't be too much. If you have the 10th edition, you should be fine for the stuff that we're doing. Quite honestly, all the changes that they make in auditing, and they have made quite a few recently. Almost none of them have to do with the actual testing of audit, of actually doing the procedures. The procedures for auditing cash are still the same. The procedures for auditing, inventory, they're still the same. So if you have a different version of the book, that's you guys. So if you already have the 10th edition, don't buy another one. If there is something a little bit different, we can go over it. Another thing I haven't been able to find is most textbooks will have a page that has revisions from one version to the next. And I haven't found that in this textbook. Now, I have found a thing that has the differences between the answer keys for stuff in the book. This problem is different now or whatever. This problem got moved. Problem 37 is now problem 38 or whatever it is. Found those, but as far as the actual content, I haven't found anything that actually specifically says what's different between them. If there is something different, we can make do with that. Another thing too about these textbooks you should also know is that a lot of times, if there is something missing, it's probably, if you Google it, you're probably going to come up with the answer, the same answers that the textbook has for whatever it is. Okay. Yeah. Any questions on that?
so there is no any assignment due for next class?
Just the
Or you could just give us.
just this number 2 in the classical sampling. Go through that and see if you can come up with that one. But no, nothing out of the textbook and nothing other than that.
Okay.
Any questions? Again, and now again, that website. I paid them with PayPal. I don't know if I would.
I think you can do it with a credit card too. I'm trying to buy it right now.
Yeah. I'm not. I say I don't know anything about the site. It seems like it's legitimate that they have, because it's actually used quite a bit, I guess. But anyway, again, it's just going to be a PDF file. It's not going to be anything fancy. But yeah. Question on that?
Yeah, because Amazon has over $36 to rent, I think, and $41 to buy.
Oh, well, that's not bad. Yeah, that's not bad either.
And then Chegg had it for $70 to rent, I think. That's how much I paid.
Oh, okay.
Uh-huh.
Yeah. I'm not. Like I say, I was purely looking for it just because I couldn't respond from the publisher. But I haven't given up. I'm still hoping. I hope my our curriculum chair will hopefully come through. Actually, they'll acknowledge our existence and we'll be happy. All right. Any other questions?
Nope, I'm good, thank you.
Okay. Well, if you have any questions, feel free to contact me afterwards, and we can go over stuff or whatever you have any questions on. But this, so when we end here, this video, hopefully by midnight it should be up. Okay. All right, guys, I will talk to you in a week's time.
Thank you very much,
Right.
Professor.
Good night.
Good night, Professor.
Good night.
Good night.